taking a quick look at Apple. Apple reported a couple of days ago, and after hours, it struck not a new all-time high, but a high of several weeks, up at 139.50. But as you can see, in the light of day, the day after the earnings report, the highest it traded here was only about 137.07. And from there, it just sold off, closing below its 10-day simple moving average, both on the day that it was going into its earnings report and the day after. And then here on Friday, boom, we see that it traded down and it closed below its 20-day simple moving average. The last time it did this was in a spat of selling that was going on at the end of March, coming into the new month of April. So this kind of looks familiar, right? And what did it do in April? It gapped up open. Actually, on March 31st, it actually closed the month of March above its 10 and 20 days. So it was 2 days before the end of March. But as we got into April, it began this move up where we see it working at now. I got to back out this chart. I'm trying to turn off my phone ringer here. Let's take a look at this chart backed out a little bit now. Okay? Because overall, this is really, here's the rub on Apple. Apple has been inside this really good, intense bull fork, going back all the way here to the 2020, the original 2020 high before we went into the COVID sell-off. That's point 1 for the fork. Point 2 is that March low from 2020, market-wide low. And then point 3 is this 2021 high that it made going into the stock split in September of 2020. And then that fork projects out, and you can see that ever since the stock split, it comes down and it basically and fundamentally holds the median line and trades inside the upper part of the bull fork. But as we got into 2021 and we started seeing overall tech take a hit, people trying to sell that originally, it started off in February, the end of January, beginning of February, with people having to sell stuff, fund managers having to sell stuff to cover this GameStop short, this huge short squeeze in GameStop. And then it just continued on, and we've seen all of tech get pulled into this sell-off. And it wound up breaking down below its median line and coming all the way down to test the 200-day simple moving average. The last time we saw it tangle with the 200-day was all the way back here in March of 2020 during the COVID sell-off, where it broke down below its 200-day and struggled for a while before regaining and coming back. Well, here it was saved before it hit that 200-day and broke. We have Warren Buffett, Berkshire Hathaway shareholder meeting this weekend, and he still owns quite a bit of Apple. Maybe we'll get a pop on Apple on Monday, pulling it out of this funk. What we'll be looking for on Apple going out into the future is for it to gravitate towards the top of the fork. We can take a measured move target, taking where the stock swung up here after this, after it hit this high, going into the split, and then it fell, this high that it came back to, this lower high, which sort of became a resistance point, and then finally it broke out of this towards the end of 2020. We could take the move from that high to this high, take that range, double it up, it'll get us to about 165 for the stock. And if we were to double the range down instead, we would get down to about $104, $105, something like that. But as you can see, the stock stays in the upper half of the fork, so it's more likely to be going to this target up here at 165 than it is to be going down here to this target here, because this would take a huge break of the 200-day simple moving average, and I really don't think that we have a sell-off akin to the one that was going on back here in March of 2020 in the cards for us anytime soon, no matter what happens with capital gains taxes. So looking back in, close up at the chart one more time, what we want to see if we're going to get a pop anytime soon is we got to see the stock clear this 10 and 20-day simple moving average, and we need to see it print this high that it made in the after hours last week after reporting earnings. 139.50, I can just say that if you buy the stock or you buy calls on it, you're going to want to see this stock get above 140. Once it gets above 140, it's going to start that march on its way up to 165 and complete the target. If we come in a little weak one more time on Monday, we're going to probably hit this median line and bounce off of there. If we break the median line, then the market just wants to see Apple get back to its 50-day simple moving average, where I think it'll get bought. Pretty good volume here the day after earnings. Not as much volume today at the end of the month. Let's see what happens on Monday with this thing. maybe Uncle Warren will get this thing on its way to 140 rather than back down here to 130 flat at the bull fork median line, or all the way back down here to about 126, 127 if it's going to hit its 50-day. That's it on Apple. Hope this video helped you out. As always, good luck and good trading.